Good morning, all. Today we are going to see about fundamental and technical analysis. As in whole, Indian securities market are classified under the headship of SEBI. We have stock and commodities market, derivatives exchanges, NSE, BSE, MSE, and MCX. We are having depositories like NSDL and CDSL, and the other intermediaries like stockbrokers, RTS, mutual fund, investment advisors, etc. To start the investment in security market, we are in need of three variables. It includes bank account, trading or broking account, demat account. Why do we invest? Investment is necessary to support your financial needs when you do not earn money. By investing a portion of your income, you allow money to grow and work for you. There are three parameters to assess the suitability of any investment avenue. It includes return potential, safety, and liquidity. Various avenues where money can be invested are broadly classified into some groups known as asset class. Stocks or equity shares are mostly popular class of assets. What is meant by stock selection? Stock selection is the selection of one or more stock, that is shares, based on certain set of criteria in order to maximize the probability of meeting the trading or investment objective. There are more than 5,000 stocks available for trading or investment. None can trade or invest in all at the same time. Hence, one need to select a manageable number of stocks. Fundamental and technical analysis are the two most preferred tools for stock selection. Fundamental analysis includes quantitative and qualitative. Fundamental analysis is a method used to identify the true value of stock. The current price of a stock may not reflect the actual value of stock. The stock may be overvalued or undervalued in the market. Fundamental analysis helps investors to study the health of the company, and thus it leads to actual value of stock. This is done by using various qualitative and quantitative factors. The main purpose of this method is to identify companies that are fundamentally strong in order to invest in them for a long term. Economic analysis involves assessing or examining topics or issues from an economist's perspective. This allows the investors to analyze the market from the big picture to all the way down to the individual stocks. By examining the economic numbers, one can determine the current market strength and have a better idea of what the future holds. Key economic indicators. Investors must incorporate while selecting stocks. Index. It includes Nifty and Sensex. Gross domestic product (GDP), unemployment rate, inflation rate, consumer confidence, purchase managers index. Types of fundamental analysis. It is classified into two areas, namely qualitative and quantitative. Qualitative takes into account the information that can be expressed in numbers. It relates to the company itself. Factors like management experience and performance, corporate governance, and industry and competition, etc. Quantitative analysis is related to the information that is shown in company's financial statement. It involves measuring simple statistical data to complex calculations. This analysis helps you to evaluate investment opportunities such as when to buy and sell securities. Factors like company's revenue, profit margin, return on equity, future growth potential, and financial ratios. Here are some of the financial ratios that we use for fundamental analysis. Price to earnings ratio, PE. It is one of the most widely used financial ratio analysis. In order to compute the PE, we are calculating the price per share by earnings per share. As a thumb rule, a low PE ratio is preferred while buying a stock. Price to book value. It can be computed by means of using current price of the stock by book value per share. A lower BPV ratio could mean that the stock is undervalued. However, the definition of lower varies from sector to sector. Financial ratios includes return on equity (ROE), This amount of net income returned as a percentage of shareholders' equity. In order to compute the ROE, we are calculating the return on equity, that is net income divided by average stockholders' equity. Debt to equity ratio. It measures the relationship between the borrowed capital, that is debt, and the capital contributed by shareholders, that is equity. In order to compute the debt equity ratio, we are calculating the total liabilities divided by total shareholders' equity. As a thumb rule, companies with a debt equity ratio more than 1 are riskier. And last one is about current ratio. It is a key financial ratio for evaluating companies' liquidity. In order to compute the current ratio, we are calculating the current asset divided by current liabilities. As a thumb rule, a company with a current ratio greater than 1 is better. Now we are moving into the technical analysis. It focuses on the stock market rather than the company. It seeks to predict the price movement by examining historical data, mainly price and volume. The underlying idea is that the market price already reflects the fundamentals of an given stock, which therefore can be ignored. It is a good idea for investors to leverage both technical and fundamental analysis to fill this gap. These are some of the terms which has been used to find the price charts: support level, resistance level, breakout, trend line, and relative strength. Technical analysis uses a variety of charts based on the information they seek. However, there are three types of charts that are mostly commonly used. They are line chart, bar chart, and candlestick. Line chart. It plots the closing price of the share of each trading day over a period. The line is found by joining the dots plotted on the graph, shows the movement of stock price during the period. Bar chart. It plots the intraday high and low price of a stock using a bar for each trading day for a specific time period. The top of the bar corresponds to the day high and the bottom day's low. Two additional horizontal lines indicate the opening and the closing price. Length of the bar is proportional to the volatility in stock. Colored code. If the share price closes above the open price, it is colored green, and if the close below the open bar is colored red. Candlestick chart. It displays the relationship between the high, low, and opening closing price of stock. The body of the candle represents the opening and closing price during the period. Above and below the body are vertical lines called wicks and shadows that shows the low and high price of traded prices. While an individual candle provides sufficient information, patterns can be determined only by comparing one candle with its preceding and next candles. These are some of the differences between this fundamental and technical analysis. Fundamental analysis aims at analyzing the stock based on the economic and financial sectors. Long-term approach has been used for fundamental analysis. They use financial statement for analysis, incorporate new market information. When compared with fundamental analysis, technical analysis uses historical stock movement to predict the future price of stock. It is short-term approach. It uses a price movement chart for analysis, focus mainly on past performance. These are some of the 5 steps approach for great stock picking. Approach stock purchase as buying a business rather than just a stock purchase in the portfolio. Evaluate the true worth of the business considering the future earnings potential. The margin of safety is the real risk containment measure, not stop loss. Do not depend on turnaround as it seldom occurs. Invest for long term to generate inflation and adjusted superior returns. So when one asks how to choose a stock to invest, the real question is how to identify a great business and what are all the parameters should be used to identify it. Always remember for financial goals and invest time frame. Review your financial goals periodically, at least once in 5 years. Risk and return profile of various assets are not constant. Consider taking help from the registered and qualified investment advisor. No stock remains the best all the time. Market is dynamic and you need to review your portfolio periodically. As in whole, investing money is the process of committing resources in a strategic way to accomplish a specific objective. Thank you.